Hey guys. We just wanted to give you a quick update on this trade that I sent over this morning. There's a little bit of nuance here, and this is an example that I thought might be worth showing you here in terms of stop placement. Now, this is all contingent upon the amount of risk that we're talking about, your account size, what you're comfortable with, the amount that you put on into the trade. And it's difficult for me to give you precise entry and exit because people are trading on different exchanges. I can just show you what I'm seeing here, what I'm doing trading on Kraken. So the chart that I sent over this morning, we were working off of the hypothesis that because of this ABC here coming down to 100% and the 618, those two overlapping, that we had a nice risk reward entry here as the market touched the 618 and started to bounce off of it, right? So we had that little pop that you'd expect. We saw the reaction. But now the market's coming back down, and Bitcoin seems to be struggling here to get any upside momentum and put together multiple candles, depending on the time frame, but we're struggling to get some upside momentum. But this is just a good example, as I've referenced frequently, that you've got to check from prior pivots. So if we look here and your stop was just below this level, as I had sent it off to you, as the market's coming down to that, we want to be aware of the possibility that we might be pulling from the lower pivot. So if we go back to this pivot, I'm going to put this back here and show this to you. Now we've come down, and there's a difference here of $8-9. So not a huge move. And this is a good example where this can be a reasonable thing to do to give yourself a little bit more room. Now, one of the things that you've seen in some of the videos that I've sent over is this tendency when stops are being run at the 618 that you'll see little wicks come through, hit stops, and then turn around. So one of the things that you can do, and that I will often do, is go to a 65%. Now, it starts to clutter your chart, so you got to be conscious of that. So I don't always put it on. But when I see the market coming down like this, and we've got this little tick here now from this prior swing low, what I'll do is move my stop just below that 65. So I'm sitting now at 42.34. You want to stay away from round numbers if you can. Those will often get ticked. They won't go through it, and then they'll turn around. So if you're not out, that's a reasonable spot to pull the stop back just a hair. It's a very small amount of additional risk. We may well get stopped out here, may well. But if you're comfortable with a little extra risk here, you could pull it to just below that 65 on the premise that we're working now off of this swing low here. That 65 has been ticked. We've seen a reaction. I wouldn't take anything beyond that. Like I wouldn't at this point pull back to this swing low. We're looking for some sort of a five-wave structure here. It's just not happening, at least not yet. So I want to keep that stop relatively tight here. If we get some traction, great. If we don't, we'll stand aside, and then we'll wait for the market to move, put in a higher low, and we'll get back in the market. Okay, that's just the update I wanted to send over. All right, back to you with more.